Well, good morning. This is Michael Douville, and we have a very special guest today. Charles Nenner is joining us. Things are going up and down, and we want to get questions from Charles because when Charles Nenner speaks, it really always pays for you to listen. Hi, Charles. How are you?
Okay, hanging in there with all this market volatility, like you said.
Let's bring this very first chart up because we've been talking about the commodities, and commodities ran up like crazy, but now you said there's no place to hide, and look what's going on with commodities. Now, this is the Goldman Sachs commodity chart that you sent out. Now, this is your proprietary chart, and this right here, this date, is when this dotted line takes place. So this is a very, very recent chart. This is the 7th of July of 2022. And what does that signify?
Well, you see a little bit before there, we have on top, we have the Goldman Sachs Commodity Index. Below that is my system that shows the tops and the bottom. So you see the top was there. And now we're getting a little bit closer to a low. So actually today was a high number, 9.1 in inflation, but the next one should be a little bit lower because of all the commodities that are coming down. But then you see that there's a low at the dotted line and then one after that. And then the commodity index should pick up again, which means is that the inflation is going to continue up. And as you maybe remember, I had at the beginning of the year a target of 12.5%. I still think we're going to get there before we have a pause, but it's going to be much more than 12.5% in the coming years. So it's going to be a very difficult time to save whatever you have.
So if I can ask a question, on this chart, it looks like it comes down. So it looks like we're going to have a moderation in prices for the commodities. Is that correct? It looks like prices are going to come down just a little bit. Is that what this area here is?
Well, this is a daily chart, so it is very short term. And you see the first low was on the 7th of July. Then it goes a bit up and then it goes down again before it really starts going up until at least next year. That's how it works. So the weakness in the commodities was not represented in the latest number of inflation, but the next one could be a bit weaker, surprisingly enough, based on this commodity index, because it's always behind a couple of weeks.
So this is showing that probably have a little moderation in commodities coming, but that's only just for a very small time. So it's like a small bounce. So this is the weekly, and this is showing that this is the commodities as well.
Yeah, well, this is the weekly, which shows actually longer term. What is longer term? For the next couple of months, you have to combine the daily with the weekly. So the daily is going to bottom in a week or so and try to test the highs one more time, but the weekly already is down, which means is for the next couple of months, longer term inflation, I can't say will be under control, but will not as bad as it seems, which for people who don't trade the commodity index doesn't mean well, but for bond traders, stock traders, currency traders, it means a lot.
Well, and of course, if you're a producer, you're going to want to go ahead and buy your materials now, I would guess, huh? So this tells us, this chart that we're looking at, that we're going to slow down in the commodity prices are going to come down, but they're going to go up later in the year. Do we know what kind of time frame we're looking at that it's going to start going up again?
Well, this weekly cycle is down, I see, into November or so. So we're going to have a bounce starting in a week based on the daily cycle that turns up, but it will not get very far. Again, it will not get further than the last high because the weekly is down. We have the situation in a lot of markets, in the gold silver market, in the grain market, all the weeklies are the currency, the crude oil market. All the weekly cycles are down at the moment, and some daily cycles are turning up, so you can see a bounce. But for the moment, the longer term, what's longer term? The next couple of months, it's down.
So do you think there's going to be some investment opportunities? You say there's nowhere to hide. How long do we have before we have someplace that we can go to park our cash? Because as you know, you don't want to lose money. But putting your money into cash at this time, you lose money because we've got 9% inflation. So somewhere we need to put our capital.
So I bet the next trade that we're looking forward to is going long gold and silver. Not yet. We have the same situation. We could see a bounce, especially starting today, because the daily cycle goes up, but the weekly cycle is down into November. So I think it will only be later in the year when the bull market resumes. For the rest, it's difficult. The stocks will continue bear market. The bonds will continue the bear market. If you currency trade a longer term, you can be long the dollar against the euro. Crude is also under pressure because the weekly cycle is down. So you have to play things from the short side if you want to make money, and otherwise you sit on the cash and at least don't lose money until our next good trading opportunity.
Now, this is the base metals. So this is what the industry uses. This is going to be all at the producer price index. I'm assuming now in the base metals, that's iron and nickel, I would guess, and aluminum.
It's an ETF. So I showed them the ETF went up. So we expected the economy to be strong, but then it topped, as you see. And for the moment, it's down. I think we're going to have a recession, a serious recession with inflation, which is going to be a very bad combination.
So got a downturn. This dotted line, which is the March 11th, is kind of the peak in the economy. You can already see it because you can look at almost any chart and show that the economy is starting to roll over. It is really slowing down and slowing down radically. I mean, look at your chart, how this happened. It just came down like a rock. It just collapsed, and it coincides with your peak in your proprietary information. How long do you suppose the recession is going to last? Is there any way we can look at this?
I think it's going to be a long, bad recession based on all the debt outstanding, the inflation that's going higher. It's going to be a very bad situation, and for people who know what happens, they really should study what happened in the 70s up to the 80s. Be prepared what to expect, because most people are our age and they were really not in touch with what happened in the 70s, so they don't really understand the situation.
Well, I remember the 80s. The 80s and 80 to 82, where we had a double recession back to back. That was very, very difficult. That was a really tough recession. That's when interest rates were high. They were knocking out inflation. I think the interest rate cycle peaked then. Boy, there was just all kinds of trouble. So we're going to need some kind of vehicle with which to sustain ourselves. Is that correct? Because are bonds going to be any good during this? It doesn't look like they're going to be.
No, you can only play some bounces, but for the next year, still interest rates are going up, and it's a problem because the economy is going to get weaker, and because of the inflation, the Fed has to act and react, and interest rates will go up.
Well, where are people going to? So we're going to have problems with the economy. We're going to have people with problems with jobs. We're going to have problems with their businesses. Where are they going to get an income? Where can they park their money to get an income? Is there anywhere they can get an income? Because they're going to have to pay their bills, Charles.
Right. So it's a problem. When the bonds were around, I think the 30-year around 190, we sold everything. We talked about it. Remember, it says get out of bonds.
Yeah, I do.
And now they're in the 130s, and stocks are down, on the average, not the index, on the average 40-50%. And it's a bit late. There's nothing you can do. And there's nothing, the only thing you can do is watch our research. And when we go long gold and gold stocks and silver stocks, just join us.
Okay, well, that's really, really good advice, because we want to preserve our capital at this point. We don't want to take any risks. We want to, at this point, we don't want to be aggressive at all. This is a time where you want to be really, really conservative. This is wheat. Again, we've talked about this coming off, and it looks like it's dropping. And how long do you suppose the wheat? Now, this is going to go directly to food supplies. So this is going to be something that's international. It's going to cause turmoil across the world if food's high.
Yeah, but you see how interesting it is when Biden talks about the Putin inflation. So why does wheat come down? Because Putin is still having a war over there. So if it came up because of the war, and they don't let the farmers put in wheat for the next season, and they don't let them export, so why is wheat coming down? In short, don't listen to the pundits, don't listen to the media, don't listen to anybody, because you cannot predict what happens over here. The cycle topped. The interpretation is then that wheat prices are going down. As you see, the cursor is at the 29th of July. So for the moment, the wheat prices are under pressure until August.
Well, and that goes with the fact that we thought that it looks like you're going to get a little bit of moderating inflation, but just for a very moment. It's really interesting how your chart got the plateau here too.
The interesting thing is we don't know what the weather is going to be, but it always works. So if somebody has an idea, I like to know the answer, because I don't know myself. How does the algorithm know what the weather is going to be in the future? But the algorithm knows what the price of the grains is going to be. It's like a mystical thing. I don't really know how to explain it.
Here's that gold chart that we've been talking about. Now, this is also a weekly chart, and this is this dotted line is the 16th of December, so it's still a little ways out. This is what you're talking about, that gold is probably going to drop a little bit. We're a long ways away before we can really start diving into gold, I would guess, huh?
Yeah, but you have to combine this with the short-term cycles, and I'm really paying attention to the short-term cycles because I don't want to miss this buying opportunity. So we're on the edge, and see when we go long or we don't go long. And, we update 4 times a week, also intraday. And we're going to be on top of when to go long silver and gold.
So, Charles, would you say that this would be a place where you could kind of get your toe in the water and take a small position in gold and silver, knowing that we've got a bull market coming?
You know what the problem is with putting your toe in is that then people say, I'll do it for the long term. And then it goes $40 against you. And for the long term, it goes $100 in long term. By $200, you sell out. And then I will give a buy signal, and then you're afraid to take the buy signal. That's usually what happens. So the best thing is just to stand aside till we give a buy signal.
Well, and I know, because you've been kind enough to send me some of your research, that your research shows both an entry and an exit point. So when it gets the entry, you know when to get in, and then it tells you your target price. A lot of people don't understand your
it tells you also how long the up move is going to be, how many weeks, how many months. So it becomes very simple, the price targets and the timing.
And so when you put a price target out, when it gets to that price target, you should be selling your position. Is that correct?
When the price target is hit or the cycle is on the top, you have to sell your positions. But of course, we mentioned that and we follow up.
So I'm just trying to struggle here as to where people can kind of put some of their capital. So if you could maybe put a little bit in gold, but you have to realize that there's going to be some turmoil in the gold market.
Let me be very strict. Or the system works or it doesn't work. If it doesn't work, don't listen to me. If it works, don't try to do something. Just wait till I give the buy signal.
Safest thing, just stay out of gold till the signal comes along.
Watch the research. As you know, is people can get it 30 days for free to what you would say put their foot in the water. See how we do it, and then if you trust the system, just wait for the trading signals.
Right now would be a really good 30 days period to be taking it with all the turmoil in the marketplaces. Let me just recap though. So we've got it. We've got a signal coming, but it's not here on gold because we get so many people asking questions about gold and wanting to know where gold is and silver. And it's coming, but it's not here yet. If you get an entry point now, that entry point may be better later on. So wait for a signal, get the research, and just wait for a signal. And when the signal comes, that's your entry point.
When people stop talking about gold and silver, they give up. Then you see the low. Yeah, that's how it works.
Sometimes when you've had all you can take, that's the bottom. Now here's the silver chart. Now this is a lot different. This is also the daily silver daily chart. This dotted line is the 14th of July, which is tomorrow. That's the bottom for silver. So this is not a bad looking chart.
No, but you have to understand the weekly chart. The weekly cycle is down. This is just looking for a bounce. And since the cycle is stopping tomorrow, we're looking for a reversal. And in our research on Friday, we'll give the level where you should buy if there's a reversal. So our indicators will show you when to decide to buy, but the cycle I show to be already mentally ready that there could be a buy signal in one day.
And we've talked about this before too, Charles. I've tried to do some of my own cycles, and you've mentioned the fact that there are more than one cycle that we're looking at. So you have a daily, a weekly, but there are lots and lots of other cycles that are ruling the Dow, that are ruling the stock market. And maybe they're longer, much more powerful. And would you say we have a more powerful cycle right now that's in operation? It's really forcing its way?
Well, first of all, we have a longer term gold cycle up for what is it now, 22, for another 4 or 5 years. We have an inflation cycle and interest rate cycle going up for the next 30 years because it's a very clear 30-year cycle. I think I once showed it to you, and it bottomed. And now for the next 30 years, interest rates go up. Why? Well, there's always going to be excuse. It's going to be Putin. It's going to be Biden. It's going to be the crude that's not going to come out of the ground. That we don't know. But we know that the decision is going to be made that makes the inflation go up and the interest rates go up.
Well, that's pretty good. That's pretty good advice. So you get a good idea. So that means that bonds are just going to be a terrible investment. And you need to start getting your mindset that we're going to have inflation for a really long time, and we're going to be suffering with higher interest rates, continually higher interest rates. So I'm not quite sure how we're going to do with that. Is this going to be kind of like a trading market that we're getting into? Are people that are long-term investors, are they going to have a hard time, do you think?
Well, long-term investors, depends when you joined us. If you would have joined us, you know that we went on 0 stocks December last year. And I think a year and a half, we went to 0 bonds. And that did great. And now the problem is people who will join us now have already big losses in the bonds and in the stocks. So there's not much they can do. What they can do is they can watch us for a bounce, because there always bounces in the bear markets, and then sell some of their positions.
So this is really, I keep trying to look for that glimmer of silver, but it looks like this is kind of a very difficult marketplace for most investors, and a lot of people like myself who are really not traders should really just be sitting waiting for the opportunity to go long, maybe gold and silver. But in the meantime, you just got to stay in cash. Would you say that? I keep going back to that. But that seems to be the basic theme, is that this is not a market to be really in if you don't have. I guess you don't have to be invested 100% at a time. Is that correct?
Well, I always say, I'm Dutch. Americans always say when it's a buying opportunity to make money, and I says I'm Dutch. We first try not to lose money. So if people are down on bonds and stocks like 40% and you lose 9% in inflation, you're outperforming the market. Look at it that way.
I guess that's very true. So here's the silver weekly. Oh, this is the cycle that you were talking about. So here's the silver weekly, and this is a different cycle completely. So what is this showing? This is for September 9th, 2022 is where that dotted line is. So we're approaching that.
Yeah, and then you see maybe a little bounce, but you see it's not doing so much. So the weekly cycle is not supporting a big move up. The daily cycle, we have to see if it wants to start tomorrow and have some upside. But like there used to be Marty Zweig, which one of the best investors, he used to say, don't fight the Fed. And I always say, don't fight the cycles. So the weekly cycles are down. And if you're a good trader or you follow research, you can use some bounces in silver and other commodities to make some money. But remember, the big line is still down.
So this is going to be just some trading. So they're going to be very nimble. So this is you have to really pay attention in this marketplace. Is that correct?
Yeah, you really have to follow research. We'll give you the day of the low and the level of the low and tell you when to take profit. And you'd have to do it exactly. The problem is once it starts going up, oh, here we're going, and I don't want to take profit yet. But when the cycle tops, you have to get out.
Yeah, I've heard that before. I don't want to pay the taxes on a trade, but you're so much better off taking the taxes than taking loss. So this is oil. So it looks like we're coming down just a little bit. This
hit the top exactly. So no, we have no clue why oil came down, but it came down already $20 or so. And you see the topped, and the weekly cycle is down for the next couple of weeks. So every time now you want to buy the bottom, you're going to get killed because the weekly cycle says we're not finished yet.
Can we put a amount on this, Charles? Do you know how far down this is going to go?
I have a target of 90 for the moment. Below that 77. And I don't really figure out when the weekly low is. I can prepare it for you. I just have to put the cursor to the next major low that you see there. But I think it's also going to be in December or so.
We're going to get a little relief then for the next few months. We're going to get some oil prices coming down. That should certainly help the economy. But maybe that says that there's not going to be any demand for oil.
The economy is going to be weak and going to have inflation, and it's a big problem.
This is going to be a really interesting time. Here's natural gas. This is also your weekly. That dotted line is behind us. That was the 27th of May, 2022.
Yeah, and the weekly is still down. So you see, it's very simple. If you're a long-term investor, you buy when the cycle bottoms and you sell when the cycle tops. So in this case, you would have bought around what I remember buying around 2.40, and we got out at 6.60. I still remember that, just based on this one cycle.
You and I chatted. Get out of bonds. I remember that. I remember you saying, get out of stocks. We're zero stocks. And here's a way to get your losses. So it looks to me like we're getting a little bit of relief on the energy front. So it looks like natural gas is going down. Maybe Putin's going to let that gas go to Europe. So maybe that's going to lower prices in natural gas internationally. But whatever it is, we've got lower natural gas coming to us and a little better prices on oil. Is that correct? Do I have that right?
Yeah, but we had already a big down move in gas, you see. So based on daily cycles, if I remember well, it's down for one more week a daily, and then we can have a bounce again. But remember, on the daily cycle, you can have a bounce, but the weekly cycle still shows the down move is not finished yet.
Okay. Well, so a little bit of relief coming for us. I just wanted to put this one up and say that we are going to have a private live webinar coming up. Now, oftentimes, we're not going to be publishing this, so we're going to set this up for August 7th, and this is going to be live webinar. We're going to include you and I will be talking again, and we're going to include listeners on this. So this will be the first time we've done this, Charles. I just want to let people know that they can send this to info@charlesnenner.com. If they're interested in it, we'll email you back and give you what the fee will be. But this is going to give someone a chance to ask you questions directly. And I think we're talking about maybe 45 minutes of conversation and then another 15 minutes or so of questions. So if someone had a question, they could send it to us and we could ask you directly and see if we couldn't get that answered. And that's coming August 7th of this year. So that's coming up fairly quickly. And they can just reach that by going to info@charlesnenner.com. Charles, I wanted to ask you a question too. This isn't on a slides. The U.S. dollar, you've got the U.S. dollar going up. I think your target was 112, was it?
113.
113. That's pretty high for the U.S. dollar. Do you think that the U.S. dollar cycle is going to suppress? Maybe is that affecting the rest of the cycles? Because a lot of these are expressed in U.S. dollars. For us in the U.S. dollars, as our dollar goes up, the commodity prices go down because our dollar gets more valuable.
As you know, I understand fundamentals. I just don't think, I worked for Goldman-Sachs for many years, and I said the same thing. You guys are probably better in fundamentals than me. I don't try to connect these things. I look at every commodity separately, and there could be a correlation, but we're not sure about it. And actually, it's not that interesting what the correlation is. If you want to know what the dollar does, you look at the dollar cycle, dollar levels. You want to know where the wheat price goes, you look at the wheat cycles. If there's a connection between wheat and dollar, doesn't make any difference.
Well, I was just wondering, it seems to me that as they get the problems in the world, people start sending their money to the United States, and we seem that the U.S. dollar starts getting stronger. And we certainly have had turmoil in the world. I mean, you've had lots and lots of questions asked you about what your war cycle and Dow at 5,000. Do you think we're coming close to that Dow at 5,000? I know that you're really, really concerned about this particular cycle. Is this one where maybe we're going to go that far down?
Well, we're going to there. It depends. We're going to get there before the cycle, the weekly cycle bottoms later in next year. But I think the simple explanation of the dollar is see how much interest you can get on the dollars. I got euros in the bank in Holland, and it cost me a minus 0.5%. I have to pay the bank, 50 basis points in order to keep my money over there. So what's more complicated? It's not complicated. So you change it into dollars.
Well, that's true. And then, of course, the euros are in dollar denominations. The euro's almost at par today. Is it not? I think the dollar is so strong that the euro has dropped to par with the U.S. dollar.
Yeah, it could go much lower. I made a monthly chart that shows we're going to be down for the next couple of years.
Here again, so someone, in particular in Europe, right? We're in the United States, we don't really think too much in currencies. But if you're in Europe, then if you know that your euros are going to be under pressure, then you should probably start moving some of your things into the dollars, just based on your research.
My house in Amsterdam, I told you I'd have to go to Amsterdam to empty it. I don't have the money yet. We transferred in the middle of September, but I already lost 30% because the euro came down 30%. So it's a serious business.
30% is really serious business. If you lose 30%, you're not so wealthy anymore. So no one likes that. And I think the average recession here in the United States costs people their portfolio almost 40%.
Yeah, more or less.
My age people, they have a hard time making that money up. Most of the time they're retired, they're no longer have their incomes, they have no longer money coming in. And to lose 40% in a portfolio is just devastating to them. I thank you so very, very much for your input on this. And these videos are so helpful to a lot of people. Is there anything else that you'd like to bring up? Anything that you'd like to talk about, Charles, at this juncture?
No, I'll just go to watch us on charlesnenner.com. Even if you don't want to continue with the research, you have an idea how it is to mathematically invest, how most institutions do it, and why most of the time they're right. Not because they read the newspaper, not because they look what Putin says, but it's a total different approach, and it's very good to know how it can be done in a different way.
Well, yeah, no one ever wants to watch the media, because the media is you're listening to last week's news. Well, I think that they should get your research, at least for the 30 days. They can always contact us as well. We'll pass that along to you. But I would like them to consider, if they're interested in attending this private webinar where we can ask questions to Charles. That's going to be the 7th of August, so it's coming up pretty quickly. They can send it to info@charlesnenner.com, and if they ever send it to us, we'll also certainly get it to you as well. So, Charles, thank you so very much for spending your time with us. I know that this is late for you, so thank you very much, and my best to you.
Talk to you soon.
Bye-bye now.